Hey everybody, this is Evan Carthy from evancarthy.com. We're going to look at the reverse lightning trade real quick. It is a breakout trade setup that I primarily use for my trading right now. So I already have it set up for it right here to show you how it works, and this is going to be an extreme example right here because this is what can happen, but that's why I have these parameters in place for it. So what you're looking for is you're looking for a pivot point low and you're looking for a pivot point high. So down here at the bottom right here at 28.14 is going to be where the pivot point low is. Then if you move with me over here to the left, over here where the mouse is currently hovering over this blue circle right here, or excuse me, a little teal at 28.59 25 cents, that is going to be the pivot point low and the pivot point low and the pivot point high. But as you can see, when price breaks out that pivot point high, that's what initiates the trade right here. So once price initiates the trade right there, and I'll go ahead and draw that, change the color just so you can see a little bit clearer. Price breaks out of it right there, that initiates the trade. So the first exit with it is all the way up here at 1.272 Fibonacci extension level. Now what I like to do, ignore that for right now, but what I like to do is have my exit slightly lower than the Fibonacci level, because what I've seen plenty of times, price goes up, barely ticks it, enough to complete the trade, but not enough to get you out of it. So that's why I like having my exits a little bit lower when you're going for a long trade setup for it. So as you can see, price never can hit the 1.272 extension level and started going down. So the next level we're looking at is the 38% Fibonacci retracement level. So I'll go down here and move that blue box down to it. Price came and hit it. So when it does that, we move the exit from the 1.272 Fibonacci extension level down to the pivot point high. And my exit would have been just slightly below the pivot point high where that pink line is right there. So you move all the exits to that right there. But as you can see, price at 38 never came back and hit the pivot point high. Not a problem at all, happens plenty of times. So price continued to go down, 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 down. So next level we're looking at is the pivot point low area. It's around 28.14. So price came down there and hit that. So once it does that, you move your exit down to just below the 50% Fibonacci retracement level. So the hard exit, the Fibonacci retracement low of 50% is 28.3650. So my exit, if I was taking this trade, would have been about 28.35 and 75 cents. So price continued to hit that, and then as you can see, it continued to go down. It hit the 1.272 in the other direction, and probably hit about the 1.43. Yeah, it did. It didn't hit the 1.618 on the opposite way, but it doesn't matter how much lower it goes. You don't have to move the exit anymore, because this is the final exit where price is going to hit to get you out of this trade. So what I do when I'm trading, especially in Forex, is if I'm looking for the breakout, I would have got in right here at 0.01, and then price came down, hit the 38, get in here at another 0.01, and then when price comes down to the zero line down here, and obviously those two hadn't been fulfilled yet, I'm getting in down here at 0.03. And the reason why for that is when price eventually does retrace up here, you want to make sure your total the total amount that you have in the trade is you're going to be in profit. And so that's what I figured out for myself. So I usually have about 3 times the amount I have down here at the pivot point low as I use for my breakout trade. But if price continues to go down lower, not a big deal at all, because what I'll do is I'll usually have another entry down here at the other 1.272 level at 0.01, another 0.01 at 1.618, another one at 2.618, and then finally one at 4.23 the other way. Because if you get like a flash move down, especially in Forex, when it reverses back up, you make some really good money off of it. But anyways, so you see price came down there, retrace all the way down, start going up, going up. Okay, came close, never hit the 50% retracement level, so we're still in this trade. Came back down here again, and then finally came up here and hit it, completed this trade. Because once it gets to one of your exits, the trade's over, and the trade is out, and the trade is done. So that is how it works. Let me show what it looks like when the breakout trade works for it. So using this pivot point low, and then what we'll use that pivot point high right there, because we've got the pivot point low, and then we just start looking over to the left for pivot point high. So that's one right there, that's one right there, that's one right there, that's one right there, and that's one right there, that's one we just did. So we'll go look at this one right here. So when price broke out that pivot point high right there, that initiated the trade, then it came up, retraced back down, and bam, went back up, hit the 1.272% Fibonacci extension level, and that trade is over. And then let me show you what it looks like going to the short side, because it's the same type of stuff, just a little bit of a different setup. Because what you're going to start off doing is you want to start off looking for the pivot point high. So that's going to be a pivot point high right there. There's a pivot point low down there. So when you're doing it for a short side, you're looking for a pivot point high first, and then pivot point low. Then let's draw the Fibonacci levels with extensions included. Get rid of this thing right here. So price came down. There's pivot point high. There's pivot point low. Price came down, broke out of the pivot point low. That initiates a trade. Traced back up some, but never hit the 38% level. So the exit's still at the 1.272 Fibonacci extension level. And then bam, came down to hit it, knocked it out. That one is done. And what I like to do as well, using that pivot point high, staying with that, I like to just keep on working it down. So there you have another pivot point low, lower than that one over there. So once price broke down and hit that, that initiates another reverse lightning trade. But as you can see, it barely ticked down and broke it, then reversed back up, never hit the 38, so that did not move the exit up to the pivot point low. But then price continued to go down. Bam, hit it right there. So that trade is done. That setup is over. And I think that's the last one from this move that it initiated it for. That's the little one right there. Okay, we can use this one right here. So, but this is a real small pivot point area, but we'll still use that. So price came down, and this is gonna be a perfect example right here. So let me get my fibs right on it, because this is why you have to be exact for it, because it can really change on you in a heartbeat. So price came, let me get this one set up right on it as well. All right, so using that pivot point low, let's move this over right here. Using that pivot point low, that pivot point high, price came down, broke out of it right here. So what that means is this is our first exit down here at the 1.272 Fibonacci extension level. But as you can see, price never even came close down to hitting it. Came up and hit the 38% level, 38% retracement level. So when it does that, that moves the exit back to the just north of the pivot point low. But look at this right here. Price came down, never hit. I don't know if you can see that too well, but here's the low of this one is 27.91 and 75 cents, and the Fibonacci is 27.91 and 25. So it's still 2 ticks away from getting it complete right now. So this trade is still a live trade that it's in. And the computer's freezing up, so I'll give it a second right here. But that's one of the reasons why I like to have my exits slightly above the Fibonacci levels, because if I was looking at getting out of it right here, there it is. Say I have it point up, bam, I'm out of it right there. But for the way this is going right now, this is still a live trade. So price, since it never hit the pivot point low, went back up, went up here and hit the pivot point high up here. So we moved the exit down here to the Fibonacci retracement level, just above the 50%. So it's a 28, 29, and 50. And price continues to go up. So as you can see, this one right here, price is continuing to go up the other way. Hit the 1.272, retraced a little bit off of it. Now it's going up to the 161. So you can definitely have this going against you the other way. Eventually, price will come down, back down to the 28, 29, and 50 cent. And actually, when it does, I'll do a follow-up video to show how it works, because price can go the opposite way a big amount of time, but eventually price will come back and hit this. Because let me show you real quick if this thing will load on the daily chart. Because see these lines down here, these are 2 trades that never got filled. This one right here is reverse lightning trade to the short side right here, and this one right here is a 38.127 trade. But since we're just focusing on the reverse lightning trades, we'll just look at that right now. So here's that, there's that. So there's your pivot point high, there's your pivot point low. Price came down, broke out of it, never came down, hit the 1.272 Fibonacci extension level, went back up, hit the 38, never came down, hit the pivot point low, and then he just continued to go back up. There, hit the pivot point high. So once it did that, that moves the exit right here to the pink line, which is the 50% Fibonacci retracement level at 1188 and 50. So if we look at it the other way and we just follow it up, there's the 1.272, there's the 1.618. You can see it had hit some resistance and then used the 1.272 as support, but then price kept going up some more. Again, computer's freezing, apologize for that. I'll have to restart it here in a second. But price continued to go up. So there you have this blue line right here is the 200 for it. And there's the 2.618 Fibonacci extension level. So price came and hit it, came back down, hit it again, reverse, used 200 as support, and now it's going back up. It's either going to act the same way it did down here at the 1.618, where you use that as resistance, came down here, used that support for it, blew back through it. So that may be happening there. Used the resistance, came down, hit support, and now it looks like it's starting to blow back up there again, or it could be creating a triple top. We'll have to see. But eventually, one day, don't know when that's going to happen, price will reverse and eventually come down and fill this down here at the reverse lightning trade at 1188 and 50 cents. But anyways, that's how it works. That's how I trade it, and I hope that helped. Thanks. Bye.